Good morning, Dr. Seetharaman.
Good morning.
Today we are going to talk on the US and EU, on the Russia sanctions. Sorry, US and EU came out with sanctions on Russia last week, and in this regard, we would like to hear from you on this. What are the sanctions proposed by US and EU to Russia?
Well, they have looked at three dimensions. One is those who are close to Russian president, the banks who are engaged in this, supporting the US politicians, the Russian politicians, and again, the president close businesses, the allies who are engaged in businesses, which are supporting the Russian policymakers and the president. So, friends, business, and the banks. There are three areas where they have concentrated. They identified the chief of staff. They have identified 20-odd friends, and also they have taken banks like S&P Bank, Bank of Russia, and again the calculable risk what the Russia is going through is if rating agencies, again credit card agencies, and again the overall investment banks, if they have a tight measurement mechanism on the Russian economy, then the whole equation changes in terms of borrowings, in terms of trade, in terms of banking.
What was the impact on account of sanctions?
It will have wide-ranging impact. The cost of borrowing will go up. The outlook has changed from positive to stable to negative, while downgrade still remains as an option for the rating agencies. The Fitch, S&Ps or Moody's, they have changed their outlook, but the country's BBB rating still holds good. That can be changed if there is no marked improvement in terms of policy making. And that's what we are seeing now. Now, America has gone ahead. EU has again frozen the sets of president's friends, and again, this will have serious consequence in terms of overall economic growth of the country. Your growth outlook, if the trade is crippled, if payment systems have been crippled, which has happened by MasterCard or Visa, the travel is crippled. So, the entry ban on certain countries for the Russian people, if they cannot transact through Visa or MasterCard, that will have huge impact in real order.
How can the sanctions be felt on the business front?
Business front will have multiple repercussions. If you look at the rating agencies, if their outlook is going to be negative, their potential to borrow in the international market will be crippled. And again, there were plans to borrow over $7 billion in the coming quarters, and the borrowing cost will change. Perhaps it has already gone up. Credit default swap rate has gone up over 1%. It has got potential impact in the currency market. Again, stock markets. So all this will have wide implications, and it will have a crippling chain-linked impact in substance. And that's what we should not have. The business will have a different consequence. Cost of doing business will go up. Your profitability will come down. Your liquidity will be strained if your borrowing is crippled. These are huge ramifications for the overall economic growth of the country. And that's what Americans and EU policymakers want.
How do you think has the stock market reacted to the sanctions?
Stock market has already taken a nosedive, 21%, and after invasion of Crimea, clearly last Friday itself is a classic example, straightforward, 3% down in the stock markets. That has got wider implications, and the market capitalization has come down over 60 billion since the beginning of this crisis. So more and more disinvestment will take place, the withdrawal of funds will take place from international investors, hedge fund or private equity. That will have wide implications.
How has the currency market reacted to the sanctions?
Currency market has come down almost 11% now, and after the takeover of Crimea, it is almost wild impact of nearly 3 to 4%. So, currency market is also getting wider implications. The ruble, Russian ruble, is weakening, and that will create, a different equation in terms of buying power. Internally, domestic market will have to go through realignment. The weakening of the currency might be useful for exports, but when it comes to the overall currency depreciations, the money value, net asset values of the investments within the country will go down as well.
How can the sanctions impact Russia's bond market?
We have seen the implication already. As I said, the bond market credit default swap rate has gone up between 80 to 100 basis points already. 7 billion is going to have the borrowing, which was originally estimated, will be crippled. International investors will be hesitant to invest because of the overall swap rate going up, and the future and stability of the policymakers and their political stability and the economy as a whole will go down. Growth will be impacted. Inflation will go up by a weakening currency. All this will have wide implications. Export earning capacity will be minimized if the energy security has been drained from Russia, because they will not be in a position to export Russian energies. So those are implications which have wider implications in substance as a whole.